If you're just beginning your investing journey, the best place to start is by looking into a tax-free savings account. Now, if you're not familiar with the TFSA, this video will be perfect for you. We're going to go through a high-level view of who can apply, who can get in there, why is it good, and kind of look and see if you're in your 20s and 30s, why this could be the perfect account that you can retire on. So stay tuned. We'll be going through what my theory, my opinion is at the end of the video. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the nitty gritty, I'd like to ask you a huge favor. If you learn something new or you get some value out of the video, hit the like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button and turning that notification bell on. We are going to start off by talking about what the TFSA is in the ground basis. So it's a program that is relatively new, started in 2009, and it's a way for individuals who are 18 years of age and older who have a valid SIN to set aside money tax-free throughout their lifetime. So there's other programs that are considered registered accounts by the Canadian government. One of them is an RRSP. It's something that maybe an employer may match or something that's taken out of your paycheck. Well, at the end of the day, when you look to pull that money out, you will have to pay tax. Now, this TFSA platform program registered account is saying, no, you do not have to pay tax on any capital gains. If your money goes up over the long run, you will not have to pay any tax on that money. That is particularly why I love this particular investment vehicle, especially if you are younger. And we're going to get into a little bit further on that. But what is the fundamental basis? Well, the fundamental basis is Canadian resident, SIN, and 18 years old. So as soon as you turn 18, you can go and set up this account. Now, you're turning 18 this year, the contribution limit is $6,000. We'll get into contribution limits in a bit, but basically what it's saying here is that you'll be able to contribute the amount that's allocated in that year depending on when your birthday is. So just keep that in the back of your mind because we're going to have to do some math later. But I know in the title it says savings. Now, I know a lot of people think that okay, I'm going to go use this TFSA and put my money in a savings account, when in reality, it is unfortunate that the bank savings rates are so low that they're not being able to keep up with inflation. Inflation, the hot topic right now, 4, 5, 6%. This means that your money is being eaten away every single month. You can buy less tomorrow than you could today. And that less than 1% interest rate that you're getting from the bank is not going to cut it. So why is the TFSA great? Well, it's not just cash and savings that you can invest in. You can see the permitted types of investments right here. We have mutual funds. We have securities listed on a designated stock exchange. This means stocks, ETFs that trade on the Toronto Stock Exchange, the New York Stock Exchange, or even the NASDAQ. Very reputable stock exchange, can be held within your TFSA. You can also have GICs, which are normally backed by the Canadian government. You can own bonds. And then there's even certain shares of small business corporations. Unfortunately, my knowledge does not put me into that category in terms of the small business, but where I do focus my own is in securities. And you know, you might say, hey, stocks are super volatile. Okay, inflation might be 4%, but I could lose 20% on a particular stock. Well, my advice for you is to invest in an ETF. ETFs hold a basket of companies, and it takes away the individual risk of owning just one company. So you may be able to own 30, 50, 70, or 100 different companies by owning one single ETF. And that takes away the volatility. And it's been proven over the long run that these companies should return positive money. And although it may fluctuate to the downside, you have to be patient. You have to understand that it's a long-term game, and you should be adding consistently over the life cycle. So that's the way that I think this should definitely be played. Well, what is the amount of money that I can put into this? And that's where we need to look at the contribution limit. So it was started in 2009. And if you were 18 at the point that it was started, meaning that you were born in 1991, that means you can contribute the max of the TFSA. And what we have here is the different dollar amounts that they had per year. And you can see right off the bat that it fluctuated. You had 5,000, then you had 5,500, then you have 10,000, and then they corrected that back down to 5,500. And over the past couple of years, it's been 6,000. So if we add that all together, it's around 75,500 if you were born in 1991 or later. If you are born from 1991 to present and you are 18 years old, you need to go and calculate what year you turned 18 and then add up your contribution limit, and you could go and hypothetically add that in tomorrow. So if you were turned 18 in 2019, for example, then you have 3 years of 16,000 to put in, and you could go and put in 18,000 tomorrow. In terms of increases in the future, you can take a look at what it says here, and it says the annual room limit will be indexed to inflation and rounded to the nearest 500. So I believe the next 2022 will be at that 6,000 mark, but I definitely anticipate that they will be increasing that, obviously with inflation flying so high. So make sure you look at these numbers. There are penalties if you fall without that. A penalty, for example, is that if any time in the month you have an excess TFSA amount, you are liable to a tax of 1% on your highest excess TFSA amount for that month. Now, it may not seem like a lot. It's definitely penalties that you want to avoid, especially if you're going through all the hassle of making sure that you're investing in a TFSA for the future. Now, when you talk about the max contribution limit, you have to be careful as well. If you're maxed out, hypothetically, if you put that 18K in, for example, and that's what your max contribution limit is, and you pulled some money out, well, you can't put that money back in until the following year. So stay aware of that. Make sure you're playing within the limits. And, you know, going back to my original point at what I started the video out, okay, yes, if you work for an employer that matches your RSP, yes, that's definitely something that you should be exploring. That's something that you should be taking part of. But if you don't have that and you're just looking to build your own account, I believe that the TFSA is definitely the best place to start, because if you start running some reverse math, you can take a look at what those returns may be, at what the average the stock market does. So let's take a look at something here. I've built something in a compound interest calculator, and what I've said is I'm going to start with $6,000. So if I start in 2020, let's say for example, and I put $6,000 first year and then every year additionally, and I'm going to grow that for 25 years at the average stock market return of 7%. So if you look at the stock market pulled out and expanded over a long period, it does about 7%. Yes, some years may be minus 20, some years might be 1, some years might be, you know, plus 20. We have to average that out. We know that the stock market on average does about 7% to be, you know, pretty conservative, and then not taking into account inflation. So that's something that usually trends at 2%. So let's say the stock market does about, you know, 5%. But if we're going to calculate this just to get a general understanding, we can see that over the long run in 25 years, 6,000 every year compounded ends up to be about $438,000, which is definitely a large chunk of money. And it's not assuming that, you know, you're not going to be able to do more than this or less than this, whatever that calculation is. I'll leave this this link here, and you can go and start programming your own numbers. This ends up being about about 120,000 saved over a 25-year period. And, 400 plus thousand that you would end up and retire off of. Obviously, this brings in a deeper conversation about how much you need to retire, how much you're pulling, withdrawing from that amount, how much it costs you to live per year, and seeing how long that would get you. But I believe that if you do go aggressive in terms of what this what it provides you, this TFSA, I do believe that it could be one of the main arteries for us to retire on, especially if you're investing in an S&P 500 ETF. Like we talked about, that does about 8 to 9% annually per year, or something that covers the whole TSX market. There's plenty of ETFs. I'll link some videos above that you can take a look at, but I believe very strongly in the TFSA, the tax-free savings account. If you do have any other questions, leave them down below. I'll try and refer to you as much, but it would probably be best if you are interested to call your financial institution and see what they could do to get you set up and answer some of those questions. I hope you enjoyed the video. I hope you learned something new. If you're still with me, hit that like button. I hope you all have a great week in the markets. Happy trading.